Australia's Prime Minister Anthony Albanese has raised concerns following reports that China has directed its state-owned steelmakers and trading houses to pause purchases of iron ore from BHP, the nation's largest mining company. The development has stirred unease in both political and business circles, as iron ore remains Australia's most valuable export and BHP one of the country's biggest revenue earners. According to multiple industry reports, China's centralized iron ore trading body instructed buyers to suspend new contracts with BHP and even delay some shipments already en route. The move appears to stem from ongoing tensions over pricing negotiations, with Beijing seeking more favorable terms amid fluctuating global steel demand. While Chinese officials have not formally confirmed the suspension, the reports alone have sent ripples through markets and raised questions about the stability of Australia-China trade ties. Prime Minister Albanese described the situation as concerning, and emphasized that Australia expects markets to function fairly and transparently. He stressed that Australian resources, particularly iron ore, should be able to move freely to global buyers without artificial barriers. While careful not to escalate the matter diplomatically, Albanese signaled that his government would continue to monitor the situation closely and engage with both BHP and Chinese counterparts to ensure disruptions are minimized. Treasurer Jim Chalmers reinforced the government's position, noting that he would be holding discussions with BHP's chief executive to assess the company's exposure and potential contingency plans. For Canberra, the issue is not just about one company's revenue but also about safeguarding national export income, employment in the mining sector, and the stability of bilateral trade relations. Iron ore accounts for more than a third of Australia's total export value, with China traditionally absorbing over half of that supply. BHP, along with Rio Tinto and Fortescue Metals, provides the bulk of these shipments. A prolonged pause in Chinese purchases from BHP would not only dent company earnings but also reduce government royalty revenues, potentially impacting the national budget outlook. Industry analysts believe China's reported pause may be more tactical than structural. Since the creation of China Mineral Resources Group in 2022, Beijing has sought to centralize purchases and gain stronger leverage in price negotiations against major global miners. By signaling a halt in contracts, Chinese buyers may be attempting to pressure BHP into more favorable long-term pricing arrangements. Nevertheless, some experts warn that such tactics carry risks for China as well. BHP supplies high-grade ore that is difficult to substitute easily. Shifting entirely to alternative suppliers such as Rio Tinto, Fortescue, or Brazil's Vale could create logistical challenges, raise costs, and strain the quality consistency needed for steel production. As a result, many observers expect that even if negotiations are prolonged, Chinese mills will eventually need to resume imports from BHP. For Australia, however, the political and economic stakes remain high. The Albanese government has invested significant diplomatic capital in stabilizing relations with Beijing after years of tension that saw restrictions placed on wine, barley, coal, and other exports. A renewed trade flare-up over iron ore could not only threaten that progress but also revive concerns about over-reliance on a single market. Looking ahead, several scenarios are possible. The most likely is that the pause proves temporary, serving as leverage during tough contract talks, after which purchases resume under slightly altered terms. Another possibility is a partial restriction, with China limiting purchases of certain grades or volumes from BHP while diversifying to other suppliers. The least likely but most damaging outcome would be a prolonged embargo, which would significantly disrupt BHP's revenues and strain Australia's trade balance. For now, the Australian government is adopting a cautious stance, pressing for market fairness without inflaming tensions. BHP is expected to explore contingency plans, including redirecting some shipments to other Asian buyers such as Japan, South Korea, or India, though none can fully replace Chinese demand. The situation underscores the delicate balance in Australia-China trade. While China remains by far the largest buyer of Australian resources, its efforts to exert greater control over commodity pricing increasingly clash with Australia's dependence on open market access. The outcome of this dispute will likely set the tone for the next phase of economic engagement between the two nations.